delivered with slow emotion and in a professional conversational level. Today marks a historic milestone in the technology and financial markets. The largest foreign IPO in U.S. history is officially live. SK Hynix, the global giant behind the high bandwidth memory powering the artificial intelligence revolution, is debuting on the NASDAQ under the ticker symbol SK. It is a massive $29 billion move that could reshape how U.S. investors access the core infrastructure of AI.
It really is a monumental event. When we talk about AI, everyone immediately thinks of the chips designed by companies like NVIDIA. But those chips cannot function without ultra-fast, highly specialized memory. That is where this company dominates, holding roughly 60% of the global market share for high bandwidth memory, or HBM. This listing is not just about raising capital, it is a strategic play to expose their stock to a broader, tech-focused global investor base and narrow what many call the Korea discount.
The valuation aspect is particularly intriguing. Even with this dominance, they have traded at a relative discount compared to U.S. peers like Micron. Let's break down the core thesis of this IPO and why it matters so much to the broader market right now.
To understand why this is a big deal, we have to look at the numbers. In fiscal year 2025, they delivered record-breaking financial results. Revenue surged 50% to $97.1 trillion, which is about $63 billion US. More importantly, their operating profit doubled to over $31 billion, overtaking Samsung in operating profit for the first time in history. That milestone was driven entirely by their dominance in the HBM market.
And yet, looking at the valuation, they are trading at a price-to-earnings multiple of around 35 times. That is roughly in line with, or even slightly below, Micron, which trades around 32 times, despite the fact that SK Hynix has superior market share and growth. The primary listing remains on the Korea Exchange under the ticker 000660, but this NASDAQ listing using American Depository Receipts, or ADRs, priced at $149 per ADS, changes the game. It allows global pension funds, sovereign wealth funds, and retail investors to trade them directly without dealing with the complexities of the Korean market.
Exactly. The structure is set up so that 10 ADRs equal one common share. They are offering 17.79 million new shares, which translates to 177.9 million ADRs. The lead underwriters are the heavy hitters: Bank of America, Citigroup, Goldman Sachs, and JP Morgan. The proceeds from this $26.5 to $29 billion raise are going directly into expanding their competitive moat. They are funding new fabrication facilities in South Korea, acquiring advanced extreme ultraviolet lithography equipment, and scaling up production lines to keep up with the massive demand from NVIDIA and other hyperscalers. Their HBM capacity is essentially sold out through 2025 and well into 2026.
Let's talk about the timing of this debut. The parent stock in Korea has experienced significant volatility recently, dropping nearly 15% in July alone. It closed at 2.18 million won on July 9th. How does this volatility affect the U.S. listing today?
It actually sets up a very interesting dynamic. The U.S. ADR pricing of $149 was set based on the July 3rd closing price in Seoul. Since then, we have seen some wild swings. The parent stock dropped over 14% on July 2nd, bounced back nearly 11% on July 3rd, and then drifted lower before climbing 5.3% on the day of the U.S. pricing. This means the U.S. listing is coming to market at a moment of high volatility, but it also means the ADR pricing represents a discount compared to the Korea close equivalent, which would be closer to $165. This price gap, combined with a major sector tailwind today, creates a compelling short-term opportunity. The semiconductor sector is ripping higher. The Semiconductor ETF, SMH, is up about 2.5%. The iShares Semiconductor ETF is up 3.5%. And Micron is up over 4.5%.
So the broader market momentum is acting as a strong wind at their back. But we have to look at the risks as well. We are talking about a stock that has run up over 800% in the past 12 months on the Korean exchange, moving from around 245,000 won to over 2.2 million won. Some market participants are asking if we are at the peak of the semiconductor cycle. There's also the threat of dilution, which has caused some concern among existing Korean retail investors, and the constant threat of Samsung aggressively investing to reclaim its market share.
Those are valid concerns. The memory industry is historically cyclical. If there is a sudden slowdown in AI capital expenditure by the tech giants, or if we see an oversupply of HBM as competitors ramp up production, margins will compress. Furthermore, the cross-listing creates arbitrage complexities, and the initial when-issued trading under the ticker SKHYV might have thinner liquidity. That is why any near-term play here needs to be approached with a strict, some disciplined strategy. If we look at the technical indicators of the parent stock, the 50-day moving average is around 2.12 million won, which is above the 200-day moving average of 1.07 million won. This indicates a massive long-term uptrend, but the short-term picture is highly volatile.
Let's dive deeper into the competitive landscape. Samsung is currently the world's largest memory chip maker overall, but they are playing catch-up in the HBM space. How significant is the threat of Samsung qualifying their HBM chips for NVIDIA's platforms?
It is the single largest competitive threat to SK Hynix's margins. Right now, SK Hynix enjoys a near monopoly on the high bandwidth memory used in NVIDIA's H100 and H200 chips. Because of this, they have incredible pricing power. If Samsung successfully qualifies their next generation HBM with NVIDIA, it will introduce more supply into the market. More supply naturally leads to price normalization. That is why analysts are watching Samsung's qualification progress so closely. Any delays on Samsung's end act as a direct benefit to SK Hynix.
And then there is Micron, which is also investing heavily in HBM. They have a smaller market share, around 10% or less, but they are aggressive. When we compare SK Hynix's valuation to Micron's, Micron trades at a price-to-earnings ratio of about 32 times with a market cap of around $1.12 trillion. SK Hynix has a market cap of $1.54 trillion on the Korean exchange, trading at 35 times earnings. So they are priced very similarly, but SK Hynix has 3 times the market share in the high-growth HBM segment.
Exactly. That is the core of the U.S. listing thesis. U.S. investors are highly familiar with Micron and trade it at a premium multiple during semiconductor upcycles. By listing on the NASDAQ, SK Hynix is positioning itself directly alongside Micron, allowing investors to compare them side by side. The expectation is that U.S. institutional investors will look at SK Hynix's dominant 60% market share and decide that it deserves a higher valuation multiple than Micron, thereby narrowing the Korea discount.
Let's map out that strategy. If we look at this from a swing trading perspective, what are the key levels and zones we should watch as the market opens?
For an aggressive swing trade, the entry zone is between $145 and $152. If the stock opens near the IPO price of $149, it presents a strong entry point given the sector momentum. However, if it gaps up significantly above $160 at the open, the risk-to-reward ratio becomes less favorable, and it is wiser to wait for a pullback.
And what about the targets and risk management? How should a trader plan their exit?
We have 2 main price targets. The first target is between $165 and $170, where it makes sense to lock in profits on half the position. The second target for a full exit is between $180 and $185. To mitigate the inherent volatility of a first-day IPO, A hard stop loss should be placed at $135. If it breaks below the IPO price and hits that level, the immediate upward thesis is invalidated.
That gives us a clear framework. Let us synthesize our outlook into a definitive recommendation for our listeners of the U.S. Stock Picker podcast channel. If we evaluate the current landscape, what is the final verdict?
Looking at the complete picture, this is a tactical buy for an aggressive swing trade with a short-term horizon of 3 to 10 trading days. Let's break down the key pillars of this decision. First, the news sentiment is highly bullish, supported by the broader semiconductor rally and strong institutional demand for this massive listing. Second, from a fundamental and strategic perspective, the company's 60% market share in HBM and its close relationship with NVIDIA make it a premier AI infrastructure play. The capital raised will directly fund capacity expansion to maintain this lead. Third, our swing trade analysis suggests that the conservative pricing at $149 leaves room for a first-day pop. Fourth, in terms of when to start investing, the recommendation is to enter at the market open today or on the first minor pullback. Fifth, the specific price point to start investing is within the $145 to $152 range. Sixth, regarding when to leave the market, this is a short-term tactical trade, so plan to exit within 3 to 10 trading days. And finally, the price points to leave the market to manage risk. Take partial profits at $165 to $170, fully exit at $180 to $185, and place a hard stop loss at $135 to limit downside exposure.
It is a classic picks and shovels play entering the U.S. markets at a critical juncture in the AI investment cycle. While the long-term structural demand for high bandwidth memory remains robust, the near-term volatility of a massive IPO requires utmost discipline. Thank you for breaking down the strategy so clearly.
It is all about managing risk while capitalizing on high probability setups. We will be watching the tape closely as the trading session unfolds.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We make no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing. Clickbait video. Title: Is this 29 is AI giant the ultimate growth stock? Stock Trade Podcast. Growth stock picks. Upside potential stocks. Technology stock predictions. Pop stocks.